Rex on Twitter. And just like every week, we will be taking the next hour to talk about DeFi applications and protocols all over Web3. And today we're going to focus on a few things specific to Neutron and the Bitcoin Summer campaign. Neutron is hosting a campaign to bootstrap a BTC-fi economy on Neutron, and the first phase was just ended on Sunday. So about $250,000 of rewards were distributed, and now the next phase is live, and the next 60 days, about another $5,000 per day will be distributed to all people that are in eligible positions on Neutron. So if you're interested in putting your Bitcoin to work and earning rewards on it, Neutron could be an interesting place for you. And so for people that were participating in the first phase of the campaign, we're going to go over how to claim your rewards, and then potentially people that are interested in hedging against their rewards, how to do that with the Mars protocol. And then the next point is what are the new opportunities for phase 2 in the Bitcoin campaign? Some of the rewards have changed, so we're just going to go over that. And then also a new application was just launched on Neutron yesterday called Slyce, and so we're going to demo how to use that. And then last but not least, there is a Telegram bot you can use that will automate depegged liquid state tokens, and so this will automatically arbitrage for you, and it's one of the best and easiest ways to earn yield on tokens and like the lowest risk possible, as long as you are long that specific token. So that's the outline for today. I'm going to try and get through all of that one by one, and if you have any questions as we're talking, put it in the comments on Twitter or on YouTube, and I'll try and get to any of those questions. And so let's jump right into it. Okay, so what we're looking at right here is the Neutron app, and so this is our where we're going to go and claim our phase 1 Bitcoin Summer rewards. So you can see here on the balance page, we have deposited about $55 into the campaign, and we've earned $1 whole $1.68 in Neutron rewards. So we're going to claim them. So claim rewards. Now you'll see there are 3 options for claiming. The first option is standard vest. And so this means, here we can click on it and learn more. So this means we will vest the entire amount of our rewards. So the $1.68 has been converted into Neutron using a TWAP at the end of the 60-day phase. And so we are eligible for 46.45 Neutron, and if we pick the standard vest, we will earn that full amount block by block vesting over the next 2 months. And so little by little, a portion of this will unlock, and we can come back and claim what has been unlocked and do whatever we want with it. So that's the standard vesting. The instant claim is half of what you earned in the first phase you can claim, and the other half will be forfeit. But so the 50% you claim right now. You get this liquid to your wallet. You can do whatever you want with the Neutron rewards. The other half is forfeited. So this is the kind of the choice that you have to make, is liquidity now or liquidity or more liquidity later, which is the first option for vesting. Okay, the third option is lock and boost. And so this is a mechanic of the Bitcoin Summer campaign where if you lock up Neutron for up to 1 year, so the full mechanism is if you lock one per dollar of your Bitcoin TVL in the campaign, if you lock $1 of Neutron for 1 year, then you earn a 3 times multiplier on all the rewards that are coming from the Bitcoin Summer campaign. And so this is to align people that are interested in continuing to stay with the campaign for, because it's estimated to stay live for a minimum of 1 year. And so people that are interested in participating in this campaign for the next year might be interested in getting a boost on their rewards. So that will require locking up some Neutron. So that is up to people to decide what they want exposure to and how long they want to participate in the campaign. So that's the third option. You can lock lock your rewards that you earn from the first phase and just carry it forward and keep boosting your position for the next phase. So you can lock it for a year, or you can edit the duration, and you can change this down to however long you want. If you want to learn more about the anything I just said, you can go to the Neutron Community Telegram and ask a question, because these are very important. Anything that has to do with rewards, how you accrue them, how you claim them, these are important. So you want to make sure that you understand it. There are also Medium articles that are written about this specific claiming flow and also the details. So you can go to the Neutron Medium page and also read more there. So because I want to talk about how to hedge your Neutron rewards in the next part of this video, I'm going to go with the standard vest. And so this means we're going to claim the whole $1.68, which has been converted into Neutron tokens and will vest over the next 2 months. So let's sign. Great. So that's done. You can go here on the left, a tab has appeared called vesting. And you can see the Bitcoin summer, our total allocation, 46 Neutron, 0.7 Neutron is unlocking every day for us, and every block we can start to claim little by little our vesting amount. Okay, so that is the claiming flow, and that's it. And if you go back to the Bitcoin summer tab, you can see that now this page has changed, and our rewards are now coming in. They've been reset, and now new rewards for phase 2 are starting. So part of the reason I think some people are not participating in the campaign is because of the way the rewards are structured. Compared to other types of incentives where maybe you can claim the incentives every day, for Bitcoin Summer, you need to leave your assets in the campaign for the entire duration of the campaign. They're not locked in the campaign. You can withdraw your assets anytime, but if you do withdraw them, then you will forfeit the rewards that you have accrued up to that point in the campaign. So that's one thing. And the other thing is how the rewards are then distributed. So at the end of the campaign, like we just went over, you have to choose between these 3 options. And in order to get liquid right now, you have to forfeit half of those rewards. Honestly, if you just decide to forfeit half of them, you can kind of take this number, the APY, the Bitcoin Summer APY, and just cut it in half, and that's your APY. If you already know you're going to instant claim at the end, and so earning, what is that, half of 17 is like 8% on your Bitcoin stack, that's still super good. So even if you just want to assume you're going to do that, 8% on your Bitcoin is still awesome. However, if you want to vest for the full amount and earn that 17%, but also hedge your exposure to Neutron, because the rewards will be in Neutron while they're vesting. So there's, you are exposed to the price exposure, the price action of Neutron. Whether the Neutron token goes up, then you'll be earning more as your allocation vests. If the Neutron token goes down, then your rewards are going to be smaller than what you expect. And so I'm going to show you something you can do if you want to lock in some of your profits right now without being exposed to the price of Neutron. So that's called hedging, and it's something we talk about a lot on this channel, whether you're hedging in a delta neutral strategy, when you're spot long and short on perps, then you're zero market exposed to that asset. So we're going to do the same thing, except with the Neutron that we have vesting. So we just claimed about $1.68 worth of Neutron. And so what I'm going to do is I'm going to hedge 50% of my rewards, which will essentially mimic locking in the instant 50% claim. And then the other 50% will, I'll be exposed to that price. So whether Neutron goes up or go down, I will be exposed to that. But at least I want to lock in 50% of my profits, and then I'm going to compound that into either USDC and take profits, or maybe I'll put that back into Bitcoin and put it back into the campaign. So how are we going to do this? What we're going to do is we're going to go on Mars, and we're going to add some collateral. And you can do this on any platform you want. I'm going to use Mars because it's very capital efficient, and also adding Bitcoin as collateral on Mars is a eligible yield-bearing position for Bitcoin Summer. So the strategy I'm going to tell you is actually very productive. So let's fund a new credit account so we can show you what's going on. We're going to put in, I'm actually going to use like bigger numbers here because $1.68 is very small, and so it's not very clean. So let's pretend that I was claiming $20 of Neutron rewards, and I want to hedge half of the Neutron exposure. So let's fund the credit account with some wrapped Bitcoin. Oh, here, I have $10. That's perfect. Okay, so we're going to load wrapped BTC, $10 of wrapped BTC into Mars. And you'll see here this icon says that this position is earning 17% APY in the Bitcoin Summer campaign. So remember, if we want to earn that 17%, we need to leave it in this position in Mars for the next 58 days. So keep that in mind. Okay, so now we can go to earn. We can see our wrapped Bitcoin. We're lending it out for 0.3% APY in native Bitcoin lending. And on top of that, we're earning 17% from the campaign. Okay, so now, I forgot what I had said. I would pretend to have claimed from the rewards. But if let's say I claimed $10 of Neutron rewards from Bitcoin Summer. My plan is to now hedge out 50% exposure to that. So that would mean I'm locking in 50% of those profits. So that would be $5. So right now I'm going to show you how to lock in $5 of profit from your Neutron and via hedging. Okay, so we're going to borrow $5 of Neutron. What is this? $5 Neutron. Okay, close enough. Oh, I'm so OCD. Okay, so we're going to borrow $5 of Neutron. Great. And you're like, well, just borrowing Neutron is not going to do anything because you still have to pay it back. And it's still a Neutron. But how you create the hedge is now we're going to short Neutron. And so you can short Neutron on Binance, on other perp exchanges, I think DYDX, on Mars itself. But you can also short it using spot tokens. And so there are pros and cons depending on which way you want to short Neutron. But let's just finish our loop here and then we will talk about it. So I've borrowed $5 of Neutron, and now to complete my hedge, I need to sell that Neutron for either USDC or more wrapped Bitcoin, up to you. Make sure you uncheck this margin. If you keep that checked, it means you're going to then borrow against your collateral to then make the swap. I don't want to borrow against my collateral. I just want to swap the $5 of Neutron that I borrowed for more USDC. Great. Always check the swap rate because this is part of the risks of, or the pros and cons of doing this via spot exposure versus via perp exposure. So, okay, again, we'll talk about that in a second. My brain can only do so much waiting on a transaction. Okay, here we go. So that was sold. Okay, so this is what our setup looks like. We've deposited wrapped Bitcoin, we're lending it, and we're earning 17% APY on it. We've borrowed $5. So remember, our total Bitcoin Summer Phase 1 rewards were $10. And we're vesting it linearly over the next 2 months. So we are exposed to the price action of Neutron. But we've borrowed now $5 of Neutrons. We've borrowed about 50% of our vesting allocation, and we've sold it for USDC. So now we've locked in $5 of profit. And we're even going to lend this USDC out on Mars, and we're going to be earning almost 6% APY lending out that USDC. And we're only paying less than 2% to borrow that neutron. Okay, so the net is plus, plus 4%, which is great. And then you're like, okay, well, now you have liquidation risk, and that's true. Let's go look at our liquidation risk. You hit here, portfolio, scroll down, and you click on your account. I was doing it in this one, I think. Yeah. And here, liquidation price, 0.093. That actually seems a little low. I think it's much higher. Yeah, maybe we need to refresh or something. Because that would mean if a neutron does a 2x, we get liquidated, and that's not true based on my feeling. Okay, so maybe this will update in a second, but because now we have $15 of collateral and only $5 of debt. So even if Neutron did a 2x, I don't think we'd be at risk of liquidation, especially because if Neutron does a 2x, Bitcoin is probably also going to go up a little bit. And so our collateral power would also go up. But of course, this is something to keep in mind whenever you're opening up leverage, which is what we just did, is now you have a liquidation amount level that you need to be aware of. Okay, so now this is the strategy. We've just locked in $5 of profit. Every time we want to go and claim some of our vested neutron, we go here. We claim, this looks like, okay, I can claim 0.005 neutron. You would claim this, and then you would go back to Mars, and you would repay some of your debt. Go here to our borrow position, manage, repay. And then you'd repay with the neutron from your wallet. And so it doesn't matter if neutron, goes down, it goes up, because the amount that you're claiming and the amount that you're paying back on your debt are the same. It's the same token, it's still neutron. And so you just claim and repay. Doesn't matter if it's the same price, if it goes up, if it goes down. But what you've already done is you've already locked in the $5 of profits. This is yours. So in 1 month, because what we've done is we've hedged our debt. You also claim whatever is again also the whole API again. Mars. That's yeah. Yeah. Okay. Tried turning my camera on and off. Not sure if that's gonna work. Let's try it. Okay, so that is, that's the strategy. Okay, yeah, so let's talk about whether it's, what are the differences on hedging via perps or hedging via spot. Okay, so let's go to Mars, and I want to look at the current markets for shorting Neutron, because that's what we need to do. We either short Neutron on perps, or we short Neutron by borrowing spot and selling it. So let's go to perps. Let's find the Neutron market. Okay, so currently the funding rate is negative, which means active short positions have to pay ongoing long positions. So this means if we take up a short position on Neutron, we would have to pay almost 250% APR. So that is a lot. And that means that would, eat into our profits of what we're earning from our vested rewards. Also, the open interest is relatively low. And so that means this rate can change quite a bit. If this number was positive, then maybe it would make sense to hedge using perps, because then we would actively get paid to hedge our position. Compared to what we are doing, it's much more stable, because there's, I think, over 1 million, there's hundreds of thousands of Neutron being lent, and so this rate is more stable, and it's still pretty low. And so I think this is a much better risk reward for this strategy, is hedging via spot right now. The other thing to consider is if you're hedging via spot, you need to then swap. You need to swap your borrowed Neutron for USDC. So depending on your bag size, the current balance of pools, what rate you're getting, that is also going to eat into your profits of this strategy. And so all those things need to be considered when executing this strategy. This rate looks low, lots of liquidity is being lent. What we had to borrow is not going to change this amount. And also our swap rate was really good. So everything looked okay to me. But as you're going through this strategy, you want to use those as checkpoints to check your strategy. Cool. So that's the strategy. I'm curious to hear if any of you guys are going to employ this hedging strategy. Even if you don't, I think it's just a valuable thing to think about if you're ever claiming any vested rewards, or if you have, sometimes now airdrops are vested. And so if you get a vested airdrop, you can consider locking in the current value, because that's what you're doing. You're saying, okay, I'm happy with this dollar amount of my rewards. I don't want exposure to the token. I just want that dollar value. That's what hedging is. And so if you get an airdrop that's worth $100 and you're happy with that, you don't care if the token is going up or down, you can try and hedge that position by shorting it on a perp DEX or by spot. So this is a tool that you can put in your toolbox and use for any time in the future. It's not specific to this campaign. It's a DeFi tool for you to use. Okay, one last chance for questions about this strategy, and then we'll move on to Slyce, I think is next. Or the new opportunities for phase 2. Okay, you guys can keep thinking, and let's get into the new opportunities for phase 2 in Bitcoin Summer. The biggest difference, I would say there are two big differences. One is this number, the total distributed rewards over the phase has increased. So last phase it was 250,000, now it's 300,000. And so really what that means is, assuming the Bitcoin Summer TVL stays the same, all the APRs should go up a little bit, 15% increase. So a little bump on that. So that should mean that the risk adjusted rewards of participating in the campaign, a little bit more TVL should flow in. The other main difference, our biggest difference, I would say, is that wrapped BTC lending, wrapped BTC on Amber has increased from a 3x multiplier to 4x multiplier. And so, this is, in my opinion, extremely attractive, getting 34% APY for just lending wrapped Bitcoin. And this is wrapped Bitcoin that is wrapped Bitcoin on Ethereum, bridged to Neutron via IBC Eureka, and then a single deposit position. So unlike a LP where maybe you're not comfortable with the other asset, or maybe you're maybe you don't know how to bridge this out or what your exposure to the underlying protocol. All of these questions are good questions to ask. But for this one, it's just wrapped BTC on Ethereum, which has like millions and millions of dollars of liquidity, and using IBC Eureka, which is I think only a $2 bridge fee, and it's really quick, like 15-minute bridge. And so this is something I think it's a nice position to get into. And so this is now even higher multiplier. And so Amber is, if you're not familiar with Amber, this is the application that allows you to do leverage looping on max BTC. And so you deposit max BTC, which is a auto compounding tokenized Bitcoin strategy, earning about 6% APY right now. And so you deposit that as collateral, you borrow another Bitcoin token like wrapped BTC, and then with that borrow, you swap that for more max BTC and you loop that. And so you earn the difference of the auto compounding APY of max BTC minus the cost of borrowing wrapped BTC. And so, and then you multiply that by how many times you loop. So if the difference is a 2% difference, looped 10 times, you're earning 20% APR on your Bitcoin. That strategy is also being incentivized by Bitcoin Summer, about, I think, 6% APY. So in order for this strategy to be possible, you need people that are willing to lend their Bitcoin. And so that is what this position is incentivizing. You're getting a natural 0.75% real yield in just lending APY, and then you're on top of that the 34% from the Bitcoin Summer campaign. And so that's what I would say is the biggest change for phase 2. So maybe that changes some of your strategies. Maybe the strategy we just talked about with hedging and Mars, maybe this one lending on Amber. If you want to reposition your Bitcoin Summer allocations, now is the time, as early as possible in the season, because only a few days have passed. If you reposition, remember, repositioning is the same as withdrawing. So you're forfeiting the rewards that you have accrued on those positions that which you move. So, it's best to reposition at the beginning of the phase, get in place, and then just forget about it for the next 60 days. So then you can rake in all the rewards at the end. Okay, let's check out Slyce. Where are we at? Half an hour in. Awesome. Let's do Slyce. I want to bring up. Oh my gosh, I'm not even Deploydon's friend. Oh, I think I tweeted about it. I'm so unprepared. Look at me. I definitely tweeted about it. Okay, well, this is annoying. Oh, here it is. Okay. Here is the announcement of Slyce.money. And so this is one of the first apps I used in Web3 ever was Pylon protocol from Terra One. Shout out if you're familiar with that protocol. That was like, what, 6 or 7 years ago now? And the idea, I think, was brilliant. Like, you deposit something, your capital, and you do not lose any of your capital. So in this case, it was a stable coin. So you deposited a stable coin that was earning 20% APR. And so then you deposit like $1,000 of the stable coin, and then with the 20% APR, it kind of funnels that into token launches or very risk-on volatile assets or ICOs, like whatever. The idea, the $1,000 is yours forever. That's not moving. The 20% yield that you get on it will go into these other higher risk-on assets or token launches. And so you have a way of hedging out your exposure. Like you're saying, I don't want to ape into this crazy ICO, but I still want some exposure to it. And so this is a way for people to do that. And so this application called Slyce is similar, where you deposit a yield bearing asset, and then with the yield that is being earned by that asset, you can DCA into other tokens. And so you can read about this, go to DeployDon on Twitter and read about this launch tweet. And it looks like there are a few kind of yield pools that have been launched with the app. And so let's deposit into them. So here it is, Slyce.money. And so far we have Atom to max BTC and Atom to tab. And so how this works is you deposit either Atom or dAtom. And so dAtom is a liquid staking token of Atom. So it's earning the staking rate of the Atom, the Cosmos Hub, which is about 16%. And so if you deposit like 10 Atom, that 10 Atom will probably be swapped or minted for more dAtom. And then when I go to withdraw, I'll withdraw 10 Atom plus, the max BTC that my yield has now purchased. Okay, so let's do a little demo. Let's do this one. I want more max BTC. So remember, max BTC is a Bitcoin token earning 6% APY, auto compounding, and how it gets its yield is there in the background. There's a strategy going on with the JLP, which is a perps counterparty vault on Solana, and then also shorting on perps. And so a combination of these two come together and they leave you with a net 1x exposure to Bitcoin plus yield. So I'm like, great, I want that. I want Bitcoin. So let's deposit. Perfect. We have some dAtom. So we're gonna deposit 2.23, we're like $7 of Atom. Great. What does this look like now? Okay, here it has the exchange rate, the APY. We're getting max BTC. Okay, here, pending deposits, 2.76 Atom. Each one. That's why Okay, I think it looks okay now. Okay, thanks for staying patient, guys. Okay, so it looks like our Atom will be deposited at some point. So we'll come back and check on that in a little bit. And yeah, like I was saying, while it was glitching, if you're depositing into the strategy, that means you are bullish Atom because you're holding exposure to Atom, but maybe you also like Bitcoin and you want to hedge a little bit of your Atom exposure by DCAing into Bitcoin, but you maintain your Atom stack, and with the yield from that you earn from staking Atom, you're now going to be buying Bitcoin. So that's awesome. What I am personally most excited about is something like this, and then also the opposite. So JSD is USDC lent on Mars with a few other like bonuses, and it's because there is liquidity for JSD, so you can mint it or you can buy it in a swap, and not all of the USDC that is locked into Jade is lent on, or I think I'm getting that wrong, but this is essentially lending USDC on Mars, but with a higher rate. And so you can see here, let's go to Mars, and earning USDC. Okay, so you see it's earning 5.83% APY, whereas if we go to Slyce, we can see here that Jade is earning 6.23%. So it's slightly higher, and that's due to this underlying mechanic of Jade, which clearly I have forgotten. And so this is really cool because it's basically saying you deposit USDC, you know, just like what I was saying previously with Pylon Protocol. I'm going to deposit $1,000. It's earning 6.23%. And with that yield, I want to buy Bitcoin. So keep my $1,000 savings account, and with the yield, DCA into Bitcoin. I think that's powerful, and especially because you're not just DCAing into Bitcoin, you're DCAing into a Bitcoin that is yield bearing. And so this is something you can just like set and forget for a while, and you come back and everything is being auto compounded, which is great. The other thing that I think is also pretty powerful is the reverse. So you deposit max BTC, which is a yield bearing Bitcoin, and then you're saying, I'm bullish Bitcoin, but with I'm happy with holding like one Bitcoin. And with the yield I can generate from Bitcoin, because traditionally Bitcoin cannot generate yield. With the yield I'm generating through the max BTC, sell it off into USDC because I want to hedge a little bit. Maybe I want some pizza and beer money for whatever. And you know, it's always nice to see some rewards being generated in USDC. And so eventually I'm sure we'll see something here, which is max BTC to JSD or to USDC. And you know, who knows, that position might even be incentivized through Bitcoin Summer. And so maybe you'll even get an added like 6% APR from the Bitcoin Summer campaign for depositing into this Slyce. So that's Slyce. I think it's pretty cool, and I'm looking forward to, like I was saying, this one and the other one, which is max BTC to USDC, if that comes. If you're bullish Atom or bullish Tab, you know, check it out. I think it's a fun app, and it's always cool to see DCA type apps, because DCAing is a powerful tool and everyone likes to DCA in different ways. And so this is a different way that you can DCA into different tokens. So check it out. We're still pending. We'll come back later. Any questions about Slyce? I hope you go check it out. Let me know if you do. Okay. The next and final thing on my list before we go sweep a galactic quark off of Superbolt is a new application. It's a Telegram-based application that is launching on Neutron. The official announcement is not out yet, so this is alpha, is Newt the Sniper bot. And so I, with some help from Swift, we've figured out how to get my Telegram here on the desktop for me to share with you this bot. And so we're gonna go through a little demo for how to use this bot. Okay, so there are a few things that we need to cover before we actually use the bot. And so what it is a bot that helps you identify liquid stake token arbitrage opportunities. Let's break that down. A liquid stake token is like what we were just looking at, D-Atom. And so it's an auto compounding token that is, you have exposure to the underlying token, in this case Atom, And then also the staking rewards from that token are being put back into the token and auto compounded. So that's how dAtom works. Over time, in 1 year, if you stake one atom, in 1 year, that one token will be worth like 1.15 atom, because the staking rewards are about 15%. So that's how liquid state tokens work. The same thing for Ethereum and wrap staked Ethereum. Wrap staked ETH is you are holding an auto compounding Ethereum token that has auto compounded into it the inflation of Ethereum. Okay, so that's a liquid state token. And then arbitrage is sometimes this liquid state token does not trade at the same market rate as the underlying token itself. And so sometimes it essentially, dAtom is a receipt token. It's saying that you have the right to go unbond your dAtom and pull out however much atom is like the true value of this dAtom receipt. The problem is that in order to cash in this receipt and then get out your atom, it takes 21 days, which is the same time that it takes to, if you're regular staking atom and you want to unstake your atom, the same thing, 21 days. But the benefit of holding a liquid state token is you can use this receipt token in DeFi. You can go put it on Mars and borrow against it. You can leverage the staking reward. So you can put it in Mars, borrow atom, buy more dAtom, and do the same thing we were just talking about with max BTC and BTC. What else can you do? You can use it as collateral and then short atom on perps for a delta neutral exposure. And then you're just like earning the staking reward rates of dAtom. And so there's lots of different ways to make liquid state tokens productive. The problem is that sometimes the market rate for these liquid state tokens go below the fair rate, or what they should be trading for on the market. And so sometimes that means it's like foreseeing maybe bearish price action because people are saying, I want to unstake and sell now because I think in the next 21 days something bad might happen, like to the price. And so that's for some, or maybe people are like, I want liquidity now because I want to go buy something else. So they're willing to take a small haircut on the market price in order to go buy something else. And so almost always these assets trade a little bit lower than the like fair market price. And then sometimes there are opportunities for when these assets sell for or are trading for much less than the fair market price. And you can calculate the APR that you would generate by buying these liquid state tokens and then unbonding them and then waiting the 21 days. And so this is kind of like a time-based arbitrage opportunity. And the opportunity becomes interesting only when the asset is trading for less than, like enough less than, if you're doing this strategy, you're going to earn more than just staking, because you have to assume the first step is you want exposure to this asset. So if you want exposure to Atom, or in this case, it also supports Neutron, then what are the other opportunities you can do with this asset to earn yield? So usually like the next hurdle rate is just staking. And so in Atom, it's like 15%. And so we have to see, is this strategy going to outperform staking? And currently it does. And so I'm going to show you how to identify and like explain why it is outperforming that. And so you're like, okay, all of that is too complicated. I don't really understand any of that, whatever. That's why this bot now exists. And all you do is you put Atom or Neutron in this Telegram bot, and it does all of the underlying actions for you. So you deposit your Atom and Neutron. It is now scanning the market prices on Osmosis, on Astroport, on Duality for discounted prices of these D assets. When it identifies that a discount is large enough, it swaps your Atom or Neutron into the liquid state token and then unbonds it directly with Drop, and then sends, once it's unbonded, it is claimed back to your wallet. It does all of this without you touching anything. And then it'll tell you, okay, like this ARB percentage was achieved at a certain APR, and then you can see like, wow, great, this vault is outperforming staking. At any time, you can pause the bot and then wait for all of your tokens to come back and claim and like remove all of your tokens from the bot. And so you can also, if you're worried about something happening to the bot itself or your tokens getting locked, you can export your seed phrase into a Kepler wallet and then just go manage it manually. If you do that, it will probably like mess up the bot. So I would only do that if there's a problem. And yeah, so let's like get into the flow. And so the user who might want to use this is someone who is bullish on Atom or Neutron and wants to earn higher yield than the staking rate of those two assets. And or like we talked about, you know, you can borrow these tokens and then put these borrowed tokens in the vault. So that's maybe a strategy for next week because we're running out of time. Okay, so this is the bot, Newt the Sniper bot. If you hit /start, you can see, you know, hello, this is what I do. This is what we just talked about. Automatically execute arbitrage opportunities on your behalf. Great, but you can also do more. Maybe you want to do this by yourself. You're like, I don't want to put my funds in a vault. I just want to do an arbitrage on my own. Maybe you just want to do like one arbitrage and then not stay in it for a long time. So you can send alerts when there are arbs. So you say, okay, tell me when Atom is at a good discount. You can also just like put a command in, so like show me the current discounted rates for the different assets, and then also show a chart. What is the redemption rate over the past couple weeks? And so all of these things are just giving DeFi strategists lots of tools in order to profit on these depegged assets. Whether you know, you're a beginner and you just want to put it in an automatic vault, or maybe you're a more advanced person and you're gonna wait and identify opportunities as they come and then execute on them on yourself. Okay, so let's start with like the more basic commands, which is /arb. So this shows us that Atom to DAtom, if you were to arb this right now, you would earn 22% APR. So if you're holding liquid Atom and you're bullish Atom and you want to find staking rewards for Atom, you can either stake it and earn like 16% APR, or you can buy DAtom and then unstake it, and that will give you annualized about 22% APR. But you have to wait about 22 days to claim your tokens. And that is because the DAtom is trading at a discount of about 1.43%. So that's how that works. And the same thing for Neutron. The staking rate for Neutron is only about 3%. And so you can get like 3% by staking it, or you can get 19% by buying NTRN and then unstaking it. So this is how you like, okay, like what's the current pulse? What is the current rates of these assets? The other thing is enabling the arbitrage alerts, which there are commands for up above, and so you can add the alerts to your Telegram, or you can even add this bot to your group Telegram if you want to, and enable the alerts. So if you have like a DeFi friendly Telegram chat, you can add this bot and it will send you alerts. The other one is let's see the Atom chart. So this is saying, over the past few weeks, what has the peg been like? Okay, so it looks like at the beginning of the month, a couple of weeks ago, there was a 2% depeg in DAtom, and then it fluctuated up to 5. It's moving kind of in this 2 to 4% range, and now it's trending down closer to 0. So again, as this line trends closer towards 0, there is no arbitrage opportunity. And you would be better off just staking on your own or finding a different strategy to earn yield on either Atom or Neutron. The higher this line goes, the greater the opportunity is. If at 5% depeg, you're earning like over 60% APR just by swapping from Atom to DAtom and unbonding, or by putting your Atom into the automated vault. it would be like 60%, which is what, 4 times higher than the staking APR of Atom. Okay, so that's great. So now let's just go into how to set up a vault really quickly. We have 10 minutes left. Okay, so cool. To get started, set up your vault and start earning. Vault setup. And then we're going to view our balances, and we went over the alerts. Okay, great. So we need to check our balance with the Newt wallet address. And so this is because the Telegram bot is going to make a wallet for you, and then we need to fund that wallet with Neutron or Atom, and then we need to move funds from that wallet into the vault. The vault is going to be the one that's going to be automatically arbitraging them, and whenever we want, we can move funds back and forth. Okay, so let's use balance to see our address, and then we're gonna deposit funds from our wallets into this Newt wallet. Okay, so here's our, we can just click it and it copies it. So this is our Newt wallet. So we're gonna put a little bit of Neutron and a little bit of Atom in here. And so I'm going to my extension on the training wallet, and I'm sending a little bit of Neutron for gas, maybe like 1 Neutron for gas. Great. And then I'm gonna send some Atom. I should go ahead and buy some Atom too. I'll buy like $5 of Atom. You don't see what I'm doing. I'm just swapping using the Kepler app itself. I know I'm gonna get taxed for this, but it's just quicker. Okay, approved. Okay, so I just bought $5 worth of Atom over like on like Kepler extension app because it was quick, and then I'm going to send that $5 of Atom to my Newt wallet as well. Oh my goodness, it says it's going to be a 4-minute swap because my USDC is going from Neutron to Noble to Terra, back to Cosmos, and then back to Neutron. That's great. Skip always finds these ridiculous routes for you. So this probably saved me like 1 cent. Okay, I bet if we do like a little refresher here, we'll see our, okay, great. So our Neutron is now funded in this wallet. So there's gas on this Newt wallet to perform operations. You can see there's a little bit of Neutron that is going to be kept there, and that's to help make sure that we never run out of gas. Let's see if our Atom arrived. Oh my gosh. Atom is still not here. We're just gonna do it ourselves. Great, okay, let's go back, copy this, send it from our Kepler extension. Yeah, of course. Of course, at this point, the long swap came. Okay, so we sent like 3.5 Atom, which is about $10 of Atom, to our Newt wallet. Let's check to see if it arrived. Great. Okay, so now we have funded our Newt wallet. We have gas money. We have our $10 worth of Atom, which we're going to use to deploy into this strategy. And now we have to set up our vault. So let's go to vault. and we need to deposit. So you can see that there's zero balance, and that's because the funds are in our Newt wallet, not in the vault itself. So we just need to move the atom into the vault. So let's deposit. Okay, use /1 deposit 1 atom to deposit 1 atom. Okay, great. Let's just copy that, and we're gonna do 3.7 atom. Cool, so we just put 3.7 atom into our vault. Great, and now let's see what it looks like. Go to vault. Okay, so now we need to set the strategy, because we can actually set whatever strategy we want here. It's highly customizable. So there's a default strategy, and what this does is at various thresholds, it will execute an arbitrage for you. And so there's a preset setting, so you don't need to do anything. If you want to manually customize it, then you can do that too. You can say, oh, only perform an arb if atom is more than 3% depegged. The risk there is that your atom will sit there waiting for a 3% depeg and then execute on it. So there's lots of strategy here, and you have to decide what's best for you. But if you want to set a really high rate, it's kind of like putting a low ball limit order in. You're waiting for a rare event that will be highly profitable, but there's the risk that that event never happens. So you can customize that yourself. The regular strategy is more designed to, here it is. So 30% of your vault will hit at when there's a 0.8% depeg, another 30% when there's a 1.2%. And so it's kind of meant to have a little bit slowly arbitraging and then some waiting for some higher value arbs. And so now we're set. The current premium is 0.99, and so we should see this one fire off. And so about 30%, 1.1 atom should automatically be swapped for D atom and then start the unbonding process through drop. But again, we don't have to touch this anymore. Now this is set up. Our strategy is set, and we can come back in a few months and see what the APR was of this vault. Because remember, each process takes 22 to 23 days because it needs to then unbond through the liquid staking issuer. So that's the app. I encourage you guys to check it out. If you are bullish Atom or Neutron, so if you want yield on those two assets, this is potentially a place that you can get higher yield on those two assets. And so that is what arbitrage is. And that's how you can use this bot to either do it yourself or automate the process through the vault. Here we go. Our first Atom strategy has been triggered. The premium hit was this first one, and about 1.1 atom has been sent and used for arbitrage. That's cool. Okay, we are out of time, but we are going to go sweep a galactic quark off of the floor and raffle it into the anyone who has commented. So MB, Blank, Matt, Nirmal. Thank you guys all for showing up in the YouTube. You guys will all be entered into the raffle, and also access denied, who has been watching from the Twitter stream. So thanks guys for showing up, and let's buy a quark. Looks like do we have 480 neutron? Yes, we do. Okay, so we're gonna buy this one. How much is this? $17 quark right here. It's gonna go to one of you guys. Cool. So when the stream ends, I'll do a wheel of names, and I'll put the names I just mentioned on the list, and we'll send it out. So thanks guys, thanks again for coming for another week of YieldLab DeFi AMA. So this week, what did we learn? We learned about Bitcoin Summer Phase 2 starting, how to claim our Phase 1 rewards, a strategy for hedging our Bitcoin Summer Neutron rewards. We learned about the application Slyce and what it does, and how to kind of use your yield to DCA into other applications. We also learned about a new Telegram bot that was launched on that you can use to arbitrage the assets. And so all of these apps are, anything I covered today, we're always looking for ways to improve on. So if you use the app and you have any feedback, whether that's Slyce or the bot or even the Neutron app, please send it my way and I can pass it along to the people that are in control of these applications. And if you execute any of the strategies that we talked about, please let me know. I really enjoy coming every week and talking about DeFi with you guys. And if any of you are interested in coming up on stage and talking about some DeFi that you are personally interested in or using, I'm always happy to have guests. So thanks guys for coming, and I'll see you next week.